Hi, this is Michael Regan with Regan Team Home Loans, and welcome to this week's Real Estate Roundup. First, we're going to get to home builder sentiment, and this polls builders about what they feel. Do they feel that it's going to be a good market, bad market? Basically, any reading over 50 is positive, under 50 is negative. So, current sales expectations are 38, future are up to 45, and buyer traffic is at 25. So, essentially, a lot of new home builders aren't seeing a lot of demand right now because obviously there's a lot of uncertainty with what has been happening in Iran with increased oil prices, things like that. People don't like uncertainty. That has affected new home sales. So nonetheless, that you have a lower home builder sentiment in this month's report. Now, while people may not be looking at new homes as much, existing homes, that's a different story. So pending home sales overall were up 3.8% month over month, and they're up 4.8% year over year. So this is a really good report. And just showing that even with the elevated interest rates, even with all those things that the new home builders are facing, you're still seeing overall in the entire market, you are seeing pending home sales pick up. So there is a lot of demand. And again, as rates come down, once this war is settled and oil starts coming down too, you're going to see a lot of demand. Now to new home construction. The reason we look at this is it shows us what's coming down the pipeline because we know about 1.8 million households are formed a year. So we need more homes to hold those households that are forming. And if we're not keeping up with that, then that's really supportive of home prices continuing to increase long term. When we look at this, we're not seeing anywhere near 1.8 million homes being built. In fact, permits are down 0.2% year over year. Starts are down 8.7% year over year. Construction's down 7.1%, and completions are down a whopping 14.2% year over year. And look, none of these numbers get anywhere near the 1.8 million. You just need to keep up with normal population growth, and we're already in a deficit. So what this shows is that home prices, there's still going to be a lot of pressure for home prices to continue to increase. Now getting into household formations and diving deeper. So this chart just shows the household formations. You can also see during the times when interest rates got quite a bit higher, then all of a sudden you saw a dip in household formations because it was more challenging to buy a home because it was so much more expensive. Well, now that rates dipped down, especially earlier this year, all of a sudden you had a spike up in household formations of 1.65 million. And that just shows that demand will pick up, and especially when interest rates go down, and so interest rates and affordability increases, you're going to see more household formations happen because then people can afford to go out on their own. Now diving deeper into the supply issue. So we saw earlier that builders aren't feeling really rosy about the market right now. And you're seeing that because they're not building as many homes. So if we look just based on the latest numbers, you had 1.65 million households formed as of March 2026. But then look at builders, they're only building 1.2 million. Not only considering we are already in a housing deficit where we haven't built enough homes to keep up with normal population growth. So what essentially this shows you is that while household formations are increasing, builders are slowing down. And so what that's going to mean is really supportive of home prices. No matter what you're waiting for, it's just going to get more expensive the longer you wait. Right now, we're down 19 basis points in the Fannie Mae 30-year fix. And you'll see the chart. Red is bad for rates, green is good. So we had a nice uptick where rates got a little bit better because of what was going on in Iran with the peace deal hopefully being signed and reached. And if that's settled, oil prices coming down, that'll be really good for interest rates. Obviously, today's a little bit of a down day, but overall, we are seeing rates get a little bit better overall. That's it for this week's market wrap. And don't forget, we specialize in reverse home loans for seniors and cash flow loans for investors and self-employed business owners. Have a great week.